Joining us now, Grow Investment Group Chief Economist Hao Hong. Hao, great to have you with us.
Thanks for having me.
You know, I want to get your take on just the state of affairs between the U.S. and China. It's interesting that the Micron ban happened shortly after the G7 issued its communique regarding de-risking with China. Maybe it's a coincidence, maybe it's a retaliation. What's your take on how things are right now in terms of the relationship?
Yeah, I think it's a retaliation of what the U.S. government did on the technology ban earlier on, right? So a sanction of this scale and this level is not one day's work, right? So they've been doing it, working in the background for some months now. So, they just announced it, just to coincide with the G7 meeting. So it is disappointing, to be honest, to see the relationship is not being repaired as quickly as the market has hoped. So I think right now, the market here in China is trying to look through that and focus on the domestic semiconductor names, for opportunities.
Yeah, it's interesting. It seems almost like this is sort of a little preview of what could happen, and maybe that's by design on the part of Beijing, because this Micron ban was very specific to critical infrastructure. Most of the chips sold by Micron into the China market are for consumer electronics devices. So this seems like, the tip of the iceberg. How far do you think this could go? To some extent, further bans of technology from the U.S. and other Western allies could actually harm the recovery in China?
I think to a certain extent, the Micron chips are sort of a middle-range chips. They're not like very high-end, and there are some viable substitutes that is being made by Chinese technology firms. So I think for now, China may be able to muddle through this technology ban. But I think going forward, obviously AI require a lot of computing powers. And so as a result, it's hard to see how, China can manage to win this competition, if, it just keep having this crucial technology being banned to its AI industry.
Meantime, domestically, how, do you see a stimulus package in the offing for the Chinese consumer? I think what a lot of people, when we were thinking about the Chinese recovery, they were thinking about revenge spending to the level that we saw here in the United States and in other countries, when in fact, there were no stimulus checks given to the Chinese consumer during the pandemic, so they didn't have that level of savings. You point out in your note that the Chinese consumer, the Chinese household, is actually very, very leveraged at this point in terms of their debt level. And also, they had to fare a real estate bubble that burst, basically, during the pandemic also. So what is the hope here for reviving this recovery?
Yeah, I think for now it is, still trying to see the results. The PBOC is trying to see the results from previous monetary easing. After all, we printed 30 trillion yuan worth of M2 in the past 5 months, right? So it's historic. I think for the Chinese consumer, though, because they borrowed so much during the pandemic, and also if you look at the expenditure growth during the pandemic, it substantially outpaced the income they were able to generate. And also, for China, consumption is a much, much smaller part of the economy. So it's about 1/3 of the economy versus 80% for the U.S. So I think even if the Chinese consumer really recover in the second half of this year, it is still not enough to save the economy. So you need to do substantially more than that.